Hey everyone, this is CA Crypto Daily Buzz. Today is Tuesday, March 11th, 2026, and this channel brings you the most important crypto news for investors across Southeast Asia. We've packed 6 major stories for you today, so let's jump right in. Bitcoin surged over 3% to around $71,200 after President Trump signaled a potential early end to U.S.-Israel military operations against Iran. Crude oil crashed 12% from its $119 peak, and risk assets across equities and crypto caught a sharp bid simultaneously. On-chain data shows $186 million in short positions were liquidated within 24 hours as BTC pushed above 70,000. The RSI recovered from 30 to 52, but the rally is driven more by forced liquidation mechanics than organic accumulation. The $72,000 to $75,000 zone remains the key resistance, with thin liquidity above current levels making another squeeze attempt very likely. For investors across Southeast Asia, the message is clear. Macro headlines are still driving BTC more than on-chain fundamentals right now. Whether this bounce holds depends entirely on geopolitical developments over the next few days. My personal read on this: the move looks technically clean, but the speed of the recovery and the dominance of short liquidations over real spot buying tells me this is relief, not conviction. If you are holding spot positions, this is not the moment to add aggressively. But it is also not the moment to panic sell into strength. The smart approach right now is to watch the 72,000 level closely and see whether buyers step in with real volume or whether this fades like previous relief bounces we have seen throughout this correction. Moving on to a historic milestone for Bitcoin supply. Bitcoin just crossed a massive supply milestone. The 20 millionth coin has been mined, meaning over 95% of all Bitcoin that will ever exist is now in circulation. Only about 1 million coins remain, and mining those will take roughly 114 years due to the halving schedule. Current daily issuance sits at just 450 BTC per block reward of 3.125. When you factor in an estimated 2 to 3.5 million coins permanently lost from forgotten keys, the real circulating supply may be closer to 16 to 17 million. Bitcoin's annualized inflation rate is now below 1%, officially lower than gold's rate of 1.5 to 2%. This milestone does not guarantee price movement in the short term, but structurally, it reinforces Bitcoin's position as the hardest monetary asset in existence. Here is what I think makes this important beyond the headline number. We are entering a phase where new supply is effectively negligible compared to demand from ETFs, corporate treasuries, and sovereign buyers. Spot Bitcoin ETFs alone hold roughly 6.3% of total supply, and that number keeps growing. When you combine shrinking issuance with institutional accumulation and millions of lost coins, the actual available float is far smaller than most people realize. This does not mean price goes up tomorrow, but it does mean that the next real demand shock will hit a market with almost no new supply to absorb it. Michael Saylor's company Strategy purchased $1.23 billion worth of Bitcoin, doubling down on accumulation while most of the market remains in extreme fear. Meanwhile, Bitcoin ETF inflows have turned strongly positive with $934 million flowing in recently, reversing months of institutional outflows. On the flip side, gold-backed ETFs posted their biggest one-day redemption since early 2024, with the GLD fund leading the outflow. Analysts are debating whether this marks the beginning of a structural capital rotation from gold into Bitcoin. The contrasting flows are striking, but it may still be a short-term rebalancing rather than a permanent shift. This matters for Southeast Asian investors because Strategy's continued accumulation at these levels signals that at least one major institutional player views current prices as acceptable entry, even if the broader market is in fear mode. What I find interesting about the gold to Bitcoin flow narrative is the timing. Gold had an incredible run over the past 12 months, and profit-taking is natural after that kind of move. Whether this money is genuinely rotating into Bitcoin or simply cashing out of an overcrowded trade remains to be seen. But the fact that Bitcoin ETF inflows turned positive during the same week that gold ETFs saw record outflows is not something you can ignore. For long-term portfolio positioning, this is worth monitoring closely. If the rotation continues over the next few weeks, it would be the strongest institutional endorsement of Bitcoin as a gold alternative we have seen since the ETFs launched. We still have 3 more important stories to cover. Let's continue. Alright, let's move on to the next 3 stories. Today is a key macro day. The U.S. Bureau of Labor Statistics releases February CPI data at 8:30 a.m. Eastern. January CPI came in at 2.4% year-over-year, undershooting forecasts, with core inflation at 2.5%. If February prints below 2.4, the dovish case for the Fed strengthens significantly heading into next week's FOMC meeting on March 17th and 18th. The market prices a 92% chance of a hold, but the real trade is in the updated dot plot and Powell's forward guidance. BTC has dropped after 7 of the last 8 FOMC meetings, so traders should manage leverage carefully this week. My take on this: the CPI number today is the single most important data point before the Fed meets next week. If inflation comes in soft, it gives the doves ammunition to push for rate cuts later in the year, and that is historically bullish for risk assets, including crypto. But here is the complication. The 15% global tariffs Trump imposed in late February have not yet fully filtered into the inflation data, meaning today's print might look good on the surface while hiding future inflationary pressure. For anyone trading around this event, my advice is simple: reduce leverage before the announcement and do not chase the first move. Bhutan's government moved 175 Bitcoin on Monday, roughly $11.85 million, based on tracking data from Arkham Intelligence. This follows multiple sales earlier in the year, including about $30 million in February through counterparties like QCP Capital. The country built up around 13,000 BTC since 2019 by using surplus hydroelectric power to mine, so their effective cost per coin is essentially zero. Every sale is pure profit regardless of where the market trades. Holdings have now dropped to approximately 5,400 BTC, down 58% from the peak. Prime Minister Tobgay has stated that Bitcoin proceeds fund healthcare, environmental programs, and public sector salaries. The pattern appears to be structured treasury management rather than panic selling. What makes Bhutan's approach unique is that surplus hydroelectric power would have been wasted otherwise, giving them flexibility no other government Bitcoin holder has. Contrast that with El Salvador, which bought at market prices and faced political pressure during every drawdown. The lesson for Southeast Asian governments is clear. If you want to enter Bitcoin as a sovereign, a structural cost advantage like cheap renewable energy matters enormously. Vietnam opened its first regulated crypto market earlier this year under a Ministry of Finance directive known as Decision 96. A broader digital industry law passed in mid-2025 gives crypto assets legal recognition for the first time, though using them for payments is still prohibited. The licensing framework requires exchanges to meet a $380 million capital requirement, roughly 600 times higher than Hong Kong's minimum. Foreign investors face a 49% ownership cap in licensed providers. The 5-year pilot program aims to authorize around 5 exchanges, and applications are processed through the State Securities Commission with security certification from the Ministry of Public Security. Vietnam ranked 4th globally in the Chainalysis 2024 Crypto Adoption Index, and this move positions the country as a serious regulatory player in the Southeast Asian digital asset space. My honest assessment: the $380 million capital requirement effectively limits participation to only the largest global exchanges or well-funded local conglomerates. For the average Vietnamese user who has been trading on offshore platforms for years, most will likely continue using Binance or OKX until local options become available. But the long-term signal matters. Vietnam is choosing strict regulation over the permissive approach Singapore initially took. And whether this protects consumers or pushes activity further offshore will play out over the next 2 to 3 years. Before we wrap up, here's a quick recap of today's 6 stories. Story 1. BTC surges 3% to 71,000 on Trump-Iran de-escalation. Story 2. The 20 millionth Bitcoin mined. 95% of supply now exists. Story 3. Strategy buys. 1.23 billion in BTC, while gold ETFs bleed. Story 4. February CPI drops today. FOMC next week, with 92% hold expected. Story 5. Bhutan sells nearly 12 million in BTC. Holdings down to 5,400 coins. Story 6. Vietnam launches Southeast Asia's strictest crypto licensing at $380 million requirement. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please consider subscribing, liking, and turning on the notification bell. For real-time alerts and trading signals, join our Telegram channel at https://t.me/crypto buzz. See you in the next one.